Hi friends, welcome back to the Big Joy of Learning with Bijoy ji. In this session, we will cover accounting of VAT transactions, covering the full life of a transaction from purchase of goods till the payment of the VAT liability. We will also see what is input tax credit and all about electronic ledgers maintained for accounting of VAT. Let us consider the example of a trading business. Messrs. Weissman, a distributor, purchased goods from a wholesaler, Messrs. Wholehearted, for 600 after paying 5% VAT, that is 30. He paid cash for transportation charges of 200 with 5% VAT, that is 10. Messrs. Goodman, a retail supplier, purchased these goods for 1000 from Messrs. Weissman with 5% VAT, that is 50. Let us see how these VAT-related transactions appear in the books of accounts of Messrs. Weissman, the distributor. While booking the purchase bill, he will be debiting the purchases account with the value of purchase, that is 600, and the input VAT paid for purchases 5% of 600, that is 30. We will credit wholesaler Messrs. Wholehearted with the total amount of 630 to show the amount liable to him. While booking the sales invoice, we will be debiting the customer Messrs. Goodman with the total amount due from him 1050, which is 1000 sale value plus 5% VAT of 1000, that is 50. We will be crediting the sales account with the sale value of 1000 and output VAT with 5% of 1000, that is 50, to show the VAT receivable from the customer. The VAT liability of a registered supplier is the net amount of output tax collected from the customer and the input tax paid by the supplier. That is, output tax collected minus the input tax paid. In our example, it is 50 minus 30, 20. 20 is the VAT liability of the supplier. The VAT liability is the same as the VAT on value added amount, that is sale value 1000 minus the purchase cost of 600, which comes to 400, and 5% of 400 is 20. Let us see the impact on this after accounting the indirect expense as well. Let us see how we account for the VAT on expenses. When accounting for the transportation charges paid in the books of accounts, we will be debiting the transportation charges 200 being the expense paid account and the input VAT paid with 5% of VAT paid amount against the transportation charges, that is 10. Crediting the cash for the actual amount paid, that is 210. After posting the transportation expenses, the VAT liability of Messrs. Weissman will be VAT collected on sales 50 less the VAT paid on purchases 30 less the VAT paid on transportation 10. Now the net VAT liability of Messrs. Weissman will be 50 minus 30 minus 10, that is 10. This is 5% of value added amount 200, which is 1000 sales value minus 600 the purchase cost minus the 200 transportation charges. 5% of 200 will come to 10. While making the payment for VAT liability to the authorities, we will be debiting the balance of output VAT account 50, crediting the balance of input VAT 30 and input VAT for expenses account 10. The balance amount, since it is a VAT liability, will be paid through the bank and the bank is credited with the paid amount of 10. As you can see, throughout my illustrations, I have used the VAT percentage in front of each type of ledger associated with VAT. Purchases, sales, input VAT, output VAT, etc. This is a good practice in case we have different percentage of VAT for the items the trader trades. I have avoided the percentages in the expenses account because there is a very rare possibility that the same head of expense account will have a different percentage of VAT. Let us see what is an input tax credit. The total of input VAT available to set off against the output VAT payable is called as the input tax credit, or ITC in short. In case the ITC is more than the output VAT collected, then the trader has the option to claim for refund of VAT from the authorities. While learning about the GST prevailing in India, I had come across a good method of accounting the VAT payable to the authorities. For those who are not aware of the GST, GST is Goods and Services Tax. This is also a VAT but managed in a different manner according to the GST Act prevailing in India. In the GST web portal, there are two electronic account heads. One is the electronic credit ledger and one is the electronic cash ledger. The electronic credit ledger shows the total of input tax credit available for the trader. Thus, every claim of input tax credit of the registered taxpayer eligible for claiming such credit is credited to this ledger. The amount available in the electronic credit ledger is utilized in making payments towards the outward tax liability of the registered taxpayer. Electronic cash ledger shows all the amounts paid to the authorities in cash or through bank. After deducting the input tax credit, if any balance amount has to be paid, it has to be paid through the electronic cash ledger. In GST, this method is adapted because there are different types of GSTs and there are some set rules in setting off these type of GSTs between each other. Even though most of the other countries does not have different type of VAT, I felt this is a good method to be adapted in accounting for VAT liability. So, we will be posting the VAT accounts to the electronic cash ledger and the payment or refund of the VAT will be done through this ledger. When we adapt this method, the journals will be a bit different from what we saw. For accounting the VAT liability, we will be debiting the balance in the output VAT account, that is 50, and crediting the balance in the input VAT account 30 and input VAT on expenses account 10. The balance amount will be posted to the electronic cash ledger. Since here it is a VAT liability payable, we will be crediting the balance amount of 10 to the electronic cash ledger. While paying the amount, we will be debiting this ledger and crediting the bank account with the amount paid, that is 10. In this session, we covered about input tax credit, journal entries for all basic VAT related transactions, use of electronic cash ledgers, VAT liability and refund. We will be covering the journal entries for VAT posting of advance payments in our next session. This is Bijoy signing off for now. Until we catch up in the next video. Your subscription, likes, shares and comments will be much appreciated. Thank you for your time and have a big joy of learning.